Dear students, the last chapter which we did was trial balance. Well, in trial balance, we understood the meaning of trial balance, the purposes for which the trial balance was prepared. Then after we did the methods by which you can prepare trial balance, mainly we saw total balance method and net balance method to prepare trial balance. Then after we learned different forms in which trial balance can be prepared. The first was in account form and the other was in a statement form. Thereafter we went through few important terms, items of trial balance, and at last we did numericals based on trial balance. Well, dear students, now we'll come to the end of accounting process, a chapter which is termed as financial statements. Very important chapter, guys. Well, let us recap entire accounting process. The first book we prepared was journal, subsidiary books. From that we prepared ledger. From the final balances of ledgers we prepared a statement at the end of the year which is known as trial balance. And students, now from trial balance we'll prepare financial statements. Well, financial statements are also known as final accounts, annual accounts. They are prepared at the end of the year as soon as we prepare trial balance. Well, external users, they don't get direct access of journal, subsidiary books, ledger, trial balance. They directly see the financial statements of the firm, and based on that they make all important decisions. So financial statements are very important statements for the firm. Well, if we talk about financial statements in 11th standard, we will learn financial statements of sole proprietorship firms and that also trading firms. That means we won't cover financial statements of manufacturing entities, we won't cover financial statements of partnership firms and joint stock companies. Well, students, if we talk about financial statements of sole proprietorship firms, trading firms, the first account we prepare is a trading account, the second profit and loss account, and the third we prepare a statement which is known as balance sheet. Well, trading account, it gives us total profit, total loss, which is termed as gross profit, gross loss on turnover of a goods of a specific year. Well, profit and loss account gives us net profit, net loss of a specific year, and balance sheet, students, it shows the financial position of the business. That is, it shows the assets and liabilities owned by the business. Well, now we'll understand the first account, that is trading account. Trading account is prepared at the end of the year. So, on the top of trading account, we write trading account for the year ended 31st March. Well, debit side of trading account, the first item which we record is to opening stock, that is stock lying unsold at the godown, at the shop at the beginning of the year. So that is the first item which we record on debit side. Next, we record two purchases, purchase of goods during the year. From that, we did a purchases returns. Throughout the year, we get net purchases. Then after debit side, we record all direct expenses. Well, students, now we'll understand what are direct expenses. In case of trading concerns, direct expenses means purchase related expenses. purchase of goods related expenses. In case of manufacturing concern, or expenses which are in relation with manufacture of goods, production, these expenses are termed as direct expenses. Say purchase of raw materials, wages, these all are direct expenses. Well, we'll understand this with an illustration. Say our shop is in Baroda and we have purchased goods from Mumbai. At Mumbai we paid 50,000 rupees. To bring these goods at our shop, go down in Baroda, we incur transportation expenses of say rupees 5,000. Now this transportation expenses to bring the goods at Baroda, they are termed as carriage inward, freight inward. These expenses are termed as direct expenses. Well, why these direct expenses are recorded in trading account? The reason is they are part of purchase cost. Well, in earlier illustration, rupees 50,000 we paid at Mumbai for goods purchase and rupees 5,000 which we incurred as transportation expenses to bring these goods at Baroda. If we talk about total purchase price of these goods, total cost of these goods, it comes to 55,000 and not 50,000. So, direct expenses are part of purchase price, purchase cost, and they are recorded in trading account. The next group of expenses which we record on trading account debit side is known as manufacturing expenses. Students, earlier I had specified that we don't have in syllabus financial statements of manufacturing entities. So in absence of manufacturing entities, in question if they give any manufacturing expense like factory rent, like factory power, like oil, diesel, etc. These all manufacturing expenses are recorded in trading account debit side. So if we sum up students, trading account debit side, the first item we record is opening stock, then purchase less purchase returns, then all direct expenses, and finally all manufacturing expenses. So this completes our debit side. If we discuss the first item on credit side of trading account, it's sales. Sale of goods throughout the year. From that we deduct sales returns of the year. We get net sales. The next item on credit side we record is closing stock, that is stock lying unsold at the shop, go down at the end of the year. Well, credit side, first item sales less sales returns, the next item closing stock. Now say we have donated the goods, we have distributed our goods as free samples, say the owner has withdrawn goods for his personal use, then this transactions, which is known as goods gone out of business by any other reason than sale, we deduct from purchases on debit side of trading account. So finally guys, if the credit side total of trading account is higher, the amount we get on debit side is termed as gross profit, total profit. If the debit side total of trading account is higher, the amount we get on credit side, it is known as total loss, gross loss. So basically students, trading account shows us, gives us total profit, total loss, gross profit, gross loss on turnover of a goods of a specific year.